How does 501(c)(3) status grant state tax exemptions? Have you ever wondered how certain nonprofit organizations can operate without paying taxes? The answer often lies in something called 501(c)(3) status. This federal designation is granted by the Internal Revenue Service to nonprofit organizations that are set up for charitable, religious, educational, scientific, or similar purposes. But how does this federal status translate into state tax exemptions? First, it is important to know that just because an organization has 501(c)(3) status does not automatically mean it will receive state tax exemptions. Each state has its own laws and policies that determine how tax exemptions are granted. Generally, most states requiring organizations to first obtain this federal status before they can apply for state tax exemptions. When an organization achieves 501(c)(3) status, it becomes exempt from federal corporate income tax on income related to its charitable activities. This means that donations made to these organizations are also tax-deductible for the donors. States often view this federal recognition as a reliable indicator that the organization serves a public purpose, which justifies granting state tax exemptions. In practice, after receiving federal recognition, an organization typically needs to apply to the state tax authority for exemption certificates or letters. States often extend exemptions from various taxes, including state corporate income tax, franchise tax, sales tax on purchases, and property tax. However, the specific exemptions and requirements can vary widely from state to state. For example, some states may requiring organizations to submit a separate application or registration to confirm their federal status. This process ensures that the organization complies with state-specific rules. States appreciate having a clear benchmark, like the federal 501(c)(3) designation, to streamline the tax exemption process and reduce administrative burdens. Once an organization is granted state tax exemptions, it must comply with ongoing requirements. This can include annual reporting, renewal of exemption status, and following state laws related to charitable solicitation. These steps are essential to maintain the tax-exempt status at the state level. In summary, 501(c)(3) status provides a solid foundation for state tax exemptions, but organizations must navigate each state's specific laws and procedures to secure those benefits. Understanding these requirements can help nonprofits maximize their resources and focus on their missions.